Hello students, today I'm going to discuss departmental accounting. So what do you mean by departmental accounting here? See, you must have heard or you must have seen in a supermarket or departmental store that there are various departments in a firm. For example, let's say Big Bazaar, it is having various departments. It is having ready-made garments department, it is having grocery department, it is having cosmetics department. So there are various departments there can be various departments in a particular business. So each business needs to know which department is earning more profits, which department is more efficient, which department is having less sales, or which department is attractive to the firm basically. So to know all such things, we need to maintain accounts for departments as well. There can be two methods of departmental accounts. So departmental accounts can be maintained like separately for each department or accounting in columnar books form. In the separate set of books for each department, you will maintain like trading and profit loss and balance sheet separately for each department. Or in accounting in columnar books form, what do? You make trading and profit and loss account as we used to make, but in a columnar form in which there will be different columns for the different departments. Then you will start making a general profit and loss account which will calculate the profit or loss to the firm or to the business as a whole. See, here we will come to know about which department is cost efficient, which department is earning more profits, which department is attractive to the firm, which department needs like continuous supervision. So we need to maintain departmental accounts. We need to know the actual position of each department for a business. See, from the following, you are required to prepare trading and profit and loss account for the year ended 31st December 2005 and showing the gross and net profits of each department, apportion the general expenses of the business on the basis of turnover, that is sales. Also prepare the balance sheet. See, first, capital is to appear in the balance sheet. Write it in the balance sheet. Plant list depreciation, that is 15,000 in the balance sheet. Assets, stock on opening stock, it is given for department A and B. So we will make trading and profit and loss account in columnar form. So make the format trading and profit and loss account for the year ended 31st December 2005. Now first particulars, then department A, then department B, then total, then again particulars, credit side, department A, department B, then total. Now write to opening stock 25,000 in department A's column, then 19,000 in department B's column, then two purchases, then 46,480 in department A column, then 22,050 in department B column, then wages, then departmental charges. Now sales, department A and B, 80,000 and 40,000 in the buy. Sales returns out means sales return, so you will deduct these 1160 and 700 from the sales of departments, corresponding departments, then mention that say net sales in the external column. Next, you will come to know about the gross profit or loss, then that gross profit or loss will be brought down to calculate the net profit or loss. Now rent rates 3,750 are given, then apportion the here stock in hand December 31st 2005, department A 30 and B 20,500. So closing stock is directly given in the question. So this closing stock will appear once in the trading and profit and loss account and secondly in the balance sheet. Now total sales are 1,20,000 for department A, it is 80,000, department B 40,000. So on the basis of it, the ratio becomes 2:1. So proportion general or indirect expenses chargeable to A 2/3 and B 1/3. So that is directly given here that you have to divide the expenses or indirect expenses in 2:1 ratio. So let's do it. Rent rates were given directly but not for the department, not for each department, so we have divided them into 2:1 ratio. Salaries and commission as a whole it was given 9,450, so we have divided into 2:1 ratio. Then advertising, then discount and interest, sundry expenses, they have been divided into 2:1 ratio. Then depreciation was 750, it has to be divided into 2:1 ratio. Then you ultimately will come to know the net profit. Other items have already been posted. Creditors in the balance sheet, capital was given and you have to add the profit for the department, that is 10,840. Then cash at bank was directly given, debtors, then stock, closing stock which was given in adjustments, then plant list depreciation. So this question then does not include the various complex calculations, but it just is to make you understand how you have to make the departmental trading and profit and loss account and the balance sheet, and how you have to divide the expenses. Here the expenses were to be divided in single ratio, that is 2:1. In certain cases you have to divide various expenses on in particular ratio, other expenses in a particular ratio, so you will do accordingly. Now there are interdepartmental transfers. What do you mean by interdepartmental transfers? See, the goods are also transferred sometimes from one department to another. So that is called interdepartmental transfer. For example, there may be various departments. In one department, you purchase raw material, and then that raw material is processed, and then that finally goes to the ready-made department in which you sell the ready-made garments. So in that case, you are purchasing or you are taking the material from your department. A firm has various departments like department A and B. So B department is taking all the goods or all the raw material from the A department. Now A department will also charge some profit on the goods sold by department A to department B. That can be interdepartmental transfer can be on cost as well, or on the selling price also. So if that is on the cost basis, then there is no need to make any further adjustment. But if the profit has been charged by one department to another, then you need to calculate or you need to make certain adjustments. You need to check certain things. Suppose department A has sold certain goods to department B. Now, out of those goods, few goods are remain unsold at the end of the accounting year. In that case, the profit charged by department A is unrealized from the market or unrealized by the firm as a whole. So in that case, you need to make adjustment for the stock reserve, or you need to check what is the unrealized profit which is included in the closing stock of the transferee department. Fine. So that reserve, how you will make the journal entry for the reserve? That reserve will be like general profit and loss account debit to stock reserve. You need to debit the profit and loss account with that unrealized profit. Now, in certain cases, transferee department may have some stock in the beginning of the accounting period against which stock reserve was created in the previous year. So now you need to adjust the general profit and loss account with this also. So stock reserve account debit to general profit and loss account, or you can pass on the single entry like by deducting opening reserve from the closing reserve. Fine. Let's do this with the help of the example. Now, prepare a departmental trading and profit and loss account and general profit and loss account for the year ended 31st December 2014 of Messrs. Andhra and Company, where Department A sells goods to Department B on normal selling price. See, here there is an interdepartmental transfer. Opening stock is given, then purchases are given for the departments, inter-transfer of goods are given, wages, electricity expenses, closing stock, sales, office expenses. Then there are certain combined expenses for the both departments, and you have to divide them in a particular ratio. The ratio is directly given, like salaries are to be divided into 2:1, printing and stationery into 3:1, advertisement into sales ratio you have to check, that is 4025 and 2625. But you have to check the inter-transfer of goods, because that also include the sales of department A. Then depreciation is directly given. Now let's see, is there any adjustment given? No, there are no adjustments. So let's start. See, the two opening stock, then two purchases, to transfer from A. Goods were transferred from the A department to B. Then how will you record that? Department B. For the department B, that is a purchase, and for the department A, that is a sale. So by transfer to B department A, that is a sale. Like two wages, then by sales 4025 directly given, then by transfer to B, then closing stock which was given. You will calculate the gross profit over here, and that gross profit will be brought down. Now expenses: electricity expenses, office expenses, salaries, printing and stationery, advertisement expenses. Advertisement expenses was to be divided into the sales ratio, that is 4025 and 2625. Then depreciation 1:3 ratio. You have calculated the net profit here. Now see, the goods were transferred from department A to B. Now there is a closing stock. You need to make certain adjustments for the stock reserve that will be taken care in the general profit and loss account. See, general profit and loss account for the year ended 31st, you will carry forward the profit, net profit, which is for departments A and department B. Then you have to make stock reserve, and then ultimately profit will come out, which will be transferred to the balance sheet. Now, how you have computed this stock reserve? Let me discuss this. See, now we need to calculate stock reserve. Now, department B has purchased from department A how much? 12,25,000. That was transferred from department A to B. So, in department B's purchases, 12,25,000 was transferred from the department A. So, 12,25,000 divided by the total purchase made by the department, that is 12,25,000 plus its own purchases. So that will be a total of 15,75,000. So 12,25,000 was purchased from department A by the department B out of the total purchases made by the department B, that is 15,75,000, into the closing stock of the department B, which is 3,15,000. So out of the 3,15,000, that is our closing stock, how much is from the department A? You will calculate this by using this formula. The 2,40,000 out of 3,15,000, 2,45,000 is the stock which was purchased from the department A. So now you have calculated this proportion. Now in this 2,45,000, the profit earned by department A to B, or profit earned by department A from department B was, you need to calculate the profit rate. Now department A has gross profit of rupees like 1,75,000, or sorry, 17,50,000. How much? What are the sales? Upon 52,50,000. So department A has earned profit of 17,50,000 upon 52,50,000 into 100. So you will calculate the gross profit ratio, that is 33.33%, or you can take it as a 1/3. Fine. Now the profit which is unrealized in the closing stock is 1/3 of the 2,45,000. So that becomes 81,667. So this is a stock reserve. Is that clear? Now you can check this in the notes panel. You may check your notes and you will come to know about this calculation. A firm has two departments, piece goods and ready-made dresses. All goods purchased by the ready-made department from piece goods department and charged at the usual selling price. From the following particulars, prepare departmental trading and profit and loss account for the year ended 31st December 2005. So you will make the format for trading and profit and loss account and just write the points directly in that. So opening stock 1,25,000, purchases 10,75,000, sales, then transfer to ready-made. Transfer to ready-made. See, piece good has transferred to ready-made, and 1,50,000 has been transferred. Then there are expenses, manufacturing and selling. Manufacturing expenses are for the ready-made garment, that is 30,000, and selling expenses are for both. Then closing stock is given. You can mention the buy closing stock. The stocks in the ready-made department are considered as consisting of 75% clothes supplied from piece goods and 25% expenses and clothes from outside. So ready-made garment also purchases from outside. So that contains 75% from the interdepartmental transfer and 25% is from the outside. The piece goods department earned gross profit in 2004 at the same rate as in the 2005. General expenses of the business as a whole are given 45,000. Let's start. See, opening stock, directly purchases you can mention, then sales, then transfer from piece goods. Transfer from piece good is treated as a sale for the piece good, so that will be 1,50,000 on the credit side of the piece goods and debit side of the ready-made. So transfer from piece goods 1,50,000 here. Now manufacturing expenses will come into the trading account. So that was total of 30,000 by ready-made garments, and the selling expenses were given individually for the department A and B, right? Now calculate the gross profit or loss. The gross profit or loss you have computed here. Now that will be brought forward and then you will come to know about the net profit. So now you need to compute unrealized profit. Now unrealized profit, for that you need to calculate the gross profit rate earned by piece goods from the ready-made. So that is gross profit upon sales plus transfer into 100. Gross profit earned by piece goods is 2,50,000 and sales are 12,50,000. Total sales means sales plus transfer into 100, that is 20%. Now out of the closing stock of ready-made, that is 30,000, 75% is from piece goods. So that becomes 22,500. So out of this closing stock, how much profit has been earned by the how much profit has been how much profit is still unrealized, that is 20%. So 22,500 into 20%, that becomes 4,500. Now there is an opening stock lying with the ready-made, so that also includes that there would have been unrealized profit in the past year also, so we need to make adjustment for that same as well. So we need to deduct that existing provision on opening stock of ready-made. The opening stock is 25,000. Out of 75% is transferred from the piece good, and the piece good has charged profit of 20%. So you will get it 25,000 into 75% into 20% of that becomes 3,750. So you need to deduct 3,750 out of 4,500 and that becomes 750. So this is the stock reserve which will be transferred to general profit and loss account this year. Now we'll make departmental trading and profit and loss account, and in that we'll make 3 columns. First for piece goods department, second for tailoring department, last one total. The 2 opening stock 20,000, 0 and then 20,000, then 2 purchases 2,20,000 and 10,000 for each department, then goods from piece goods department. Yes, so 2 goods from piece goods department, in that case that will appear in the tailoring department 60,000, and in the credit side buy goods from piece goods department, then you will mention here as a sale, that is 60,000 under the piece goods department. Then 2 wages 664, then closing stock, buy closing stock 38,600 and 14,000, then buy sales 2,43,000 and 1,36,000 directly. Thereafter you will calculate the gross profit or loss, that will be brought down. Then get direct expenses. 2 salaries departmental are given 4,800 and 1,200. Any other? Yes, printing and stationery 1,000 and 600 directly. See, the machinery only appears in the tailoring department, so the depreciation for this machinery will also appear in the tailoring department. Now other information, advertisement 10,000. Is there any other information? Yes, the general unallocated expenses are to be apportioned in the ratio of 3:2. The 10,000 will be divided into 3:2 ratio. So 6,000 and 4,000. Then salaries general 18,000, again 3:2 ratio. Then other things are to appear in the balance sheet. Fine. Then depreciate machinery by 10%. Machinery depreciation is 10% of 12,000, so that will become 1,200, but that will appear only in the tailoring department. The 2 depreciation under the tailoring department. Ultimately you will come to know the profit or loss. Let's check it. Yes, everything has been covered. So you will compute the net profit or loss. There is a profit, my net profit, that will be brought down to make the general profit or loss. The by net profit, piece goods and tailoring department, that is 1,37,800. Now you have to check the unrealized profit. So first of all, rate of gross profit of the piece good department you will check, that is gross profit is 1,01,000 divided by the sales, that is 2,43,000 plus 60,000 into 100, that is 33.33% or 1/3 you can take. Now out of the closing stock of the tailoring department, that is 14,000, how much is from the piece goods? Yes, tell me, how much is from the piece goods? First, you will check the total purchases made by the tailoring department. See, the total purchases made by the tailoring department is 10 plus 60, that is 70,000. So out of 70,000, how much you have purchased it from the department A? That is 60. So 60,000 upon 70,000 into closing stock, that is 14,000. So 60,000 upon 70,000 into 14,000. Whatever you will get out of this, profit rate is 1 upon 3. So 1 upon 3 of that, or 33.33% of that, you will come to know the unrealized profit. See here, 60,000 upon 70,000 into 14,000. So 12,000 is the closing stock, which still remains unsold, and the profit has been earned upon it, but that is not earned as a whole or as a firm. That has not been earned from the market. So unrealized profit is 1 upon 3 of 12,000, that is 4,000. Is it clear? Yes. Now you will make the balance sheet. Capital at profit less drawings, creditors, then machinery less depreciation, then closing stock was directly given. Then you have to deduct the provision for unrealized profit, then debtors and cash in bank and cash in hand. Fine.